Good afternoon, everybody. Today is Monday, the 22nd of August, 2011. This is Brian Shannon speaking. Let's take a look at these markets here. Today's action is brought to you by Realtick. Realtick is the platform that I use that we're looking at the charts on and complete analysis package and all the tools you need to execute your orders. It's available through a lot of different brokerage firms here in the U.S. and internationally. So take a look at Realtick.com. You can get a free trial to it for a few days as well. We're only scratching the surface of what Realtick is here by looking at these charts. But this market continues to be under pressure. We saw that first big drive lower on heavy volume, then we saw a light volume recovery with the declining 10, 20, 50-day moving average, and we have sold off obviously since Thursday when we had that gap lower. We haven't really been a lot lower since then, and we actually closed up 9 pennies today, but well off the highs here. Let's take a look at a 10-minute chart. You can see that the market had gapped up and pretty much immediately sold off. This is why we don't trust these rallies in, or the early strength in a bearish environment like we're in. Like for instance, last Thursday, we gapped down and just got crushed. Friday, we rallied some in the morning and then just bled all day long. Well, today we gapped up and pretty much bled all day long here as well, finishing right near the close. And what's happening here is that we're getting lower highs in here. That is, people are taking advantage of these little short-term bursts of buying to bring more pressure, more supply into this market, and bringing it down to these lows that we saw from last Friday. It just seems to me as though we should be getting ready for some kind of flush below these levels. They would hopefully take this market down below last or the low of August what was that, 9th there, I think. August 9th's low. If we could kind of flush underneath there, then maybe we're going to be in a position where we could start to see some relief brought to this market. But the one encouraging thing is the volume is lighter on this drive lower. And someone mentioned, I had forgotten who, and I tried to start but I lost track. But there was someone on Twitter said, that the momentum to the downside peaked on this leg lower, and that's basically what we're seeing is the momentum isn't as strong. The fear doesn't seem as strong. Now we do have a higher volatility reading, or actually we don't. I'm sorry, I was looking at the something else earlier. So scratch that statement. Sorry. Anyways, if we could get this market down below these lows and kind of take out the stops that people have in there, that would be a decent place for us to possibly bounce. But you have to consider we are in a downtrend. I mean, looking for that bounce is really in finding the area where we get a bounce that amounts to anything more than maybe just a few days is a real difficult task. If we take a look again at the Fibonacci and then the volume weighted average price since the March 2009 lows, we've got those two levels. That is the 38.2% retracement. Here's the full range, and this would give us that 38.2% retracement. Here would be our 50%, and here would be 61.8. Anyways, we have the 38.2% retracement as well as the volume weighted average price level right around in that 110, 110.50 area. They're not precise numbers to buy at or to not take action or anything. But they do come together nicely in that level. So perhaps we'll get another test down towards there. But you simply cannot trust this market. We do have a declining 5-day moving average, and all the other moving averages as well indicate that the sellers are in control on any bigger time frame. So got to look at it as guilty till proven innocent. Same thing goes for the Nasdaq. Nasdaq, we briefly dipped below that low, I think by 2 pennies on Friday. But this market's still looking quite ugly. There's no reason to look at it bullishly at all. We have that same pattern of that if we get some strength, and as we had Friday and this morning, that it gets sold into quickly. So breaking the 50 level, perhaps we get a little further flush in here. If we take a look at Fibonacci off of the lows of 2009 in here, we could get if we're to say see the similar type of 38.2% retracement, that would get us down towards the $47 level, and taking a look at the volume weighted average price, down towards 45. So Nasdaq has held up better overall, but it's still quite vulnerable in here, so keep that in mind. We've got the declining 5-day moving average. Rallies are guilty till proven innocent. If we get a bounce, there will be time to participate. It's not something you have to get excited about and rush into. The Russell 2000 did close a little bit lower here today, down 23 pennies, and same thing here. It'd be nice to see a test of those lows from a week and a half ago, down near the 63.75-ish level. Semiconductors were up 31 cents. These have been trading kind of goofy. They haven't really been trading the way the rest of the market has. Like these will be up one day when the rest of the market is down, and vice versa. So it's kind of an interesting thing. But we are already below the early in the month lows in the semiconductors, and there's nothing bullish about this chart. It gapped up and held on to a little bit of the gains today, but there's nothing quite at all bullish about these semiconductors. They're showing a little bit of relative strength, but maybe if they were to get above 28.30 or so, then they're going to see a little bit. Let's take a look actually at the volume weighted average price for the last 3 days. So that doesn't really seem like it's held much value, but 28, that 5-day moving average is going to be the first real obstacle that we're going to want to see it get above and hold above, similar to how it did over here. But they're just tough to trust because of the bigger pressure on the larger time frames. The financials were down 1.25% today. They have undercut these lows. I think that these guys really got hit a little bit more towards the end of the day on the news about Goldman Sachs chairman hiring an attorney, and Goldman Sachs got hit. You can see here late in the day quite hard. No one knows what he's hired an attorney for, but not many people like Goldman Sachs, the so-called evil squid. But that did affect obviously the financials. The financials are down through the 12 level. They're down below the lows from earlier in the month, and there's just no sign of nothing encouraging happening here on these charts. That we've they all kind of much look the same, except for gold. Gold was up another 2.5% today. A lot of people are calling it extended parabolic, overdone to the upside, trying to pick the top, and no one's been able to do it so far, except for someone who I guess maybe shorted it, above this 184.50 level. So there's about maybe 10 people that have picked the top so far in gold, but it doesn't look like an easy top to pick. Look at this monthly chart in gold so far. I mean, just to put the month of August rather, into perspective here with gold and then the S&P, just obviously much opposite. They're trading completely oppositely here. Anyways, back to gold. If you're going to be selling short this market, again, it's no different than trying to pick the bottom in the S&P 500. There'll be moments where you get it right, but these powerful trends don't typically turn all at once.